Ladies and gentlemen, good day and welcome to Siyaram Silk Mills Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ayushi Gupta. Please go ahead.
Thank you. Good afternoon, ladies and gentlemen. I welcome you all to the earnings conference call of Siyaram Silk Mills Limited to discuss the Q2 and H1 FY26 business performance. To discuss this quarter's performance, I have from the management, Mr. Gaurav Poddar, President and Executive Director, Mr. Ashok Jalan, Senior President and Director, and Mr. Suresh Shetty, Chief Financial Officer. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. For more details, kindly refer to the investor presentation and other filings that could be found on the company's website. Thank you, and over to you, sir.
Thank you. Good afternoon and a warm welcome to everyone joining us today for the earnings conference call of Siyaram Silk Mills Limited to discuss Q2 and first half of FY26 results. I hope you all have had the opportunity to review our financial results and investor presentation, which have been uploaded to both the stock exchange and our company website. Siyaram is a leading name in India's textile and apparel industry, known for blending traditional craftsmanship with modern innovation. With over 4 decades of experience, we offer a diverse range of premium fabrics and ready-made garments that reflect quality, style, and versatility. Backed by strong manufacturing capabilities, creative design teams, and a wide distribution network, we continue to set benchmarks in fashion while staying true to the legacy of excellence and trust. In the second quarter FY26, the textile and apparel sector witnessed steady growth supported by improved consumer confidence and stronger market demand. The early arrival of the festive season boosted retail activity, leading to higher footfalls and better sales performance. Overall, the quarter reflected a gradual recovery in discretionary spending, indicating a positive shift in consumer sentiment. In the second quarter, we continued to build on the momentum from the first quarter, making healthy progress across our business segments. Our new brands Z-Code, catering to fast fashion, and Devo, focused on modern ethnic wear, continue to perform well and are receiving strong customer feedback. Their growing acceptance reflects our efforts to stay aligned with the evolving market trends and consumer preferences. During Q2 FY26, we opened 7 new Z-Code stores and 2 new Devo stores, bringing the total store count to 23 Z-Code and 12 Devo stores since their launch. As discussed in the last quarter, we are working towards opening approximately 35 stores this fiscal year. Our store expansion strategy continues to focus on key markets with high growth potential, enabling us to deepen our retail presence and connect with a wider customer base. We are delighted to announce that the Board of Directors have approved an interim dividend of 4 rupees per share on a face value of 2 rupees each. This decision reflects our continued focus on creating long-term value for shareholders and underscores the company's strong financial position and confidence in its growth outlook. Our total income in the second quarter FY26 stood at 743 crores compared to 629 crores in the same quarter last year, marking an 18.1% year-on-year growth. In the first half of FY26, the total income reached 1,143 crores as against 960 crores in H1 FY25, reflecting a healthy 19.1% increase, backed by a strong brand portfolio, wide distribution network, and consistent operational execution. Looking ahead, the recent cut in GST on selected apparel categories is expected to further lift consumer sentiment and encourage more spending. With our trusted brand, wide retail presence, and focused approach, we are well placed to benefit from these positive trends and continue growing in the coming quarters. Our focus remains clear on enhancing productivity, efficiency, and profitability. We continue to invest in improving our products, strengthening customer service, and upgrading technology, all aimed at building a stronger foundation and creating greater value for our stakeholders. Looking ahead, we are committed to driving the next phase of our growth journey. While expanding our store network and promoting our brands, we remain focused on financial discipline, maintaining healthy margins, and ensuring sustainable long-term growth for the company. Now I would like to request our CFO, Mr. Surendra Shetty, to share highlights of the financial performance. Thank you.
Thank you, Gauravji. Good afternoon, everyone. Our total income for the Q2 FY26 stood at rupees 743 crores as compared to 629 crores in the Q2 of financial year 25. Fabric contributed 77%, garments 15%, and yarn and others 8% of the total revenue for the quarter. EBITDA for the quarter was rupees 145 crores as against 110 crores in the Q2 of financial year 25, and EBITDA margins stood at 19.5%. PAT for the quarter was 87 crores, reflecting a 27.2% year-on-year increase, with a PAT margin of 11.7%. For the first half of financial year 26, our total income stood at rupees 1,143 crores compared to 960 crores in first half of financial year 25. EBITDA for the period was 177 crores with the EBITDA margin of 15.5%. PAT for first half of financial year 26 stood at 92 crores with a PAT margin of 8%. Thank you all from my side. We can now open the floor for the question and answer.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dev Kulwani from Care PMS. Please go ahead.
Thank you for the opportunity. I wanted to know what has been the volume growth and value growth in the fabric and garment segments separately in the second quarter, and also what is the contribution of Z-Code and Devo in the second quarter.
So generally, in terms of volume value growth, overall growth for fabric and apparel, the traditional business has been about 15% in that range. And with regards to Z-Code and Devo, the overall contribution in the overall top line for the first half is approximately just under 30 crores.
Okay. And also company has seen good growth in past few quarters in the fabric segment. What is driving this growth? What is the reason behind it? And is it the industry growing at such level or are we gaining market share?
So if you look back over a longer period of time, maybe say a couple of years, the consumer sentiment was quite weak and there was low rural demand. I think we are in the phase where we are recovering from that and consumer sentiment is improving. Additionally, the festive season, particularly the Diwali season, being preponed slightly this year has helped that cause as well. So, of course, the market I don't think is growing at this speed. We are gaining some market share. But as a company and as a brand, I think the branded players, there is more aspiration towards the brand, and as the economy gets more formal with tax reforms and other things, then I think branded players will benefit from this.
So is this growth sustainable?
So we indicate a long-term growth average of about 10 to 12% now with this new retail business as well. Of course, the first half of the year we have seen much better growth, and therefore I think that for this year we would like to revise the guidance to maybe 12 to 14% for this year, and then we can look ahead for the next year in the following quarters.
And how has been the demand after the GST cuts in the current quarter?
I think it's still very early. Of course, GST reduction in apparel and other discretionary consumer items has definitely had a positive sentiment in the market. Also, the festive season, the wedding season this time is quite vibrant, and overall we feel that is a strong consumer sentiment going ahead.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Naitik from NV Alpha Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So my first question is, you mentioned that retail stores contribution for the first half would be closer to 50 odd crores. So, and last year or last quarter, I think you were expecting, say, 70, 80 odd crores. So do you think we can cross this number given a very strong first half?
The number I mentioned was 30 crores, just under 30 crores for the first half. And our initial expectation of 70, 75 crores is still what we are expecting at this moment. And we will update as we move ahead.
Got it. And so now, given that we might have spent, some of our older stores might be closer to spending a year of, into existence. So if you could give us some broad, store economics of what is the sales per square feet they are seeing, what are the average sizes of the stores, and how are they performing? So that would really help us.
So without getting too much into the numbers, I can just tell you that when we started this model, we started looking at two types of stores. One was the 4,000 to 6,000 square feet, smaller stores, and the other was the 6 to 8,000, some are about 9, 10,000. So there were two types of stores. The first initial few stores were on the smaller side, and then we started looking at the higher size stores. None of the stores have completed 1 year, it's still the second quarter. But initial feedback that we are getting is that the larger size stores, which were opened, only after January in this year, are seeing better results because we are able to give a better consumer experience in that larger format store where all product categories are being able to be displayed and, give a better feel for the consumer. So that is the initial feedback that we got, and incrementally we are looking at the larger size, which are all over 5,000-6,000 square feet and not more than 9,000-10,000 square feet. So that is the kind of feedback that we've got and taken action upon.
Right. And so these larger sizes are across both formats, or it is particular to Z Code only?
This is for Z Code. For Bevo, we had initially planned 2,000 to 4,000 square feet. So our average size is about maybe 2,500-3,000 square feet in this range. If you go in a mall, then sometimes it's slightly smaller. So it's also the kind of space we get, but this is the ballpark of what we are looking at.
Got it. That's very clear. And so my second question is, I wanted to understand the traditional piece of the business a little better. So if you could give me the sort of margin differential between the three segments, that would be helpful.
What do you mean by three segments?
Fabric versus garment versus yarn and knitting segment.
So yarn and knitting is a very small segment, and that is a B2B business. The main business is the branded fabric and apparel business, which has a similar margin structure. Basically, this business is a distribution-driven business where we are a brand which has manufacturing capabilities, but also relies largely on outsourcing. So it's more of a trading business. Incrementally, we plan to do more trading, and we are able to, because we have a brand and we keep promoting the brand, we are able to plan for the season on a monthly, bi-monthly basis, and use the strong and wide distribution network to give access to consumer of our product through multi-brand outlets.
Got it, sir. Very clear. That's all from my side, sir. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Nilesh from Anantnath Skycon Private Limited. Please go ahead.
Sir, congratulations on good set of numbers. My question is, as of today, we have 23 G Code and 12 Devo stores, as we plan 35 total stores for this financial year. As we are ahead of our target, in coming 2 quarters, how much store we are planning to open? And in terms of square feet total, how much square feet that we have already opened?
So this number, 35 stores that we have as of September ending, is cumulative of since we have started. So some of those stores have been opened in the last year. We have opened approximately 16 odd stores in this year, and against the initial projection of approximately 35. So that is, we are working towards how we can get close to that number. In terms of square feet, we are just under 2 lakh square feet for both these stores combined.
Okay. So how much store that still we are going to achieve in this year?
So since we had projected an initial number of approximately 35, and we have about 16 in this year, so the balance stores we are working on for the balance of half of the year.
Okay, sir. And can we get revenue from both the brands separately?
We are very early in our stage right now, so we are just giving an indication of the cumulative revenue so far, which is approximately 30 crores for the first half.
30 crore. Okay. And sir, how much EBITDA margin we are targeting in coming financial year? Whether the further improvement in the margin is possible or it is peak out?
So we will stick to our original guidance of approximately 14% of EBITDA margin without this retail business, which we have indicated earlier, which will have a hit on EBITDA by about 150 basis points.
Okay. And sir, how GST rationalization impact our performance and growth in coming years?
So bulk of the business comes from the fabric segment where GST has not been changed, so that remains insulated. But GST generally in discretionary spending has, we believe, given a boost to consumer sentiment, and therefore discretionary spending should be improved. The festive season, the marriage season ahead. So there is a complete environment from all sides where consumer sentiment should be boosted, and we are hoping to see the benefits in the second half.
Okay. Sir, one last question on our reporting. Why we are adding other income in our EBITDA?
Yeah, other income is added in the EBITDA.
Sorry?
Other income is added in the EBITDA. That is a practice.
Okay. Because if we segregate this other income, that EBITDA margin is only 15% for this quarter.
Yeah, it's around 15%. Correct.
Okay. So can you also give the guidance for this year?
Guidance for what, sorry?
Guidance of revenue.
As mentioned earlier, we give a traditional guidance of approximately 10 to 12% for the year, and we don't look at it on a quarterly basis because there is a lot of seasonality in the business. But since the first half we have overachieved from the original guidance, so we wanted to extend our guidance from 10 to 12 to 12 to 14% for this year.
Okay.
Overall this year, fiscal year.
Okay. Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Madhav from SKP Securities. Please go ahead.
Yes. Hi. Thank you for the opportunity. So I wanted to know, sir, that out of the total, how much percentage of your sales comes from how much production is in-house production. So if you can share that number, if it is very much different in case of garments, does it send separately for both, or else on a combined basis you can tell that how much is in-house manufacturing of whatever you sell.
So over the past few years, we have indicated that we want to move to more of an asset-light model. And since we are a branded company, it is easier for us to outsource and focus on the marketing side of things. And at the moment, we are approximately 50% of our production is outsourced, and that is going to increase by the day. In the garment business, this is for the fabric business. In the garment business, it is slightly more than that. So we continue to believe that is the right model for us.
Okay, understood. And sir, in the garment business, is there any particular product category from which the majority of the sales comes? For example, shirts or pants, or is it evenly distributed? How is it?
So in the traditional distribution apparel brands that we have, they are menswear brands and Western menswear. And within those menswear, the topwear, which is the shirts and formal casual, those kind of categories, they contribute the maximum percentage of the sales. But it is a thing that keeps evolving over a period of time. And since we are not manufacturing this, then we can evolve very quickly to consumer changes.
Okay, understood. And sir, is this understanding correct that for this fast fashion brand, Z-Code, it would be entirely outsourced, whatever you sell? Is this understanding correct? Or in that there is some in-house manufacturing?
So for Z-Code, everything is outsourced. But one thing that we believe is our USP is that since we are in the fabric business, since we are in the textile industry now almost 50 years, we have a strong sense of the fabrics, the qualities, the designing, and all these other aspects. So as we get more volume, we'll be able to participate more in how the sourcing is done. So even if we don't buy various stages of the product, we can influence the purchase decision and help our quality improve.
Mm-hmm. Okay. And sir, just final question for these Z-Code stores and these Devo stores, what strategy are you opting for store expansion? Is it like cluster based or you are going in different cities? How is it?
For Z-Code, for example, we have always mentioned that we want to focus on the Karnataka cluster for the first phase. So we are still focused on that cluster where Bangalore is the center and most of the stores are in Bangalore, city and suburbs, and then we move to tier 2 cities in Karnataka. For Devo also, we followed a cluster. We started with Delhi and UP and we've extended to Punjab. So we are focused on the North India cluster for the moment.
Understood. Okay. Thank you. That's it.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Parshiv Shah from Mehta Equity Limited. Please go ahead.
Thank you for the opportunity, sir. I want to ask about brand marketing budget and export strategy about the company. So how do you allocate the marketing budget between traditional business and new age brands? And second is the export strategy. So in Q1, exports were 9% of the revenue. So any new market or the partnership plan in increasing in this quarter, sir?
For the first question that you asked for marketing, we have indicated an approximate spend of 4 to 5% of our turnover for marketing, and we've continued to believe that investing in our brand is very important because that is something that is our key differentiator, and we relate well with the consumer and audience at large. So in the traditional brands, we have had an extensive campaign with various brand ambassadors for our different brands across different kinds of media, whether it is print or television or outdoor and other things. With regard to the newer brands, which is Z-Code and Devo, since we are following a clustered approach, we are focused on localized advertising and advertising next to the store and getting people aware of the brand, which is very new, as well as the store, which is also very new. So informing people about, letting them know about the brand, its offerings, and how we can attract them to the store. In terms of export, we have an export of approximately 10% of the turnover is export, which is in line with what we have seen since the last years or so. And that business is something that we are focused on. But there is also an increase in the traditional business, which is why the percentage does not change, but absolute value there is an increase in that as well.
Okay. And how is the company navigating the tariff changes and logistic challenges in exports? Any idea on this?
Yes, so tariff changes, of course, it's a dynamic situation and it is monitored regularly. We do not have any direct exposure to the US at the moment. We do export to customers. We have orders from US customers, but we right now export to garment converters which are located outside. So, therefore, there is no direct exposure as such. But of course, the situation remains dynamic and therefore buyers remain tentative.
Right. Okay. Thank you, sir. All the best for upcoming period.
Thank you.
Thank you. The next question is from the line of Deepak Patil from Equirus Wealth Advisory. Please go ahead.
Am I audible?
Yes, we can hear you.
Okay. So Raymond being one of the competitors, currently it is rationalizing in ethnic business, which is into ethnic wear. So what's your view on this particular sector and about the future growth?
Thank you. So ethnic wear is a business that is a very recent business if you look at a very long-term history. it is a very unorganized business, particularly in the men's segment, which is getting organized, and Indian wear as a product is getting more popularity. There are very few players in the national space that are present today, and we believe that we have a right to win in this segment. That is because we have a brand, Siyaram, which is connected directly to the end consumer, and over the last 2-3 decades or so, the brand is a powerful name across India, and we want to use our brand name as well as the knowledge of the industry that we have, which we believe will help us better in sourcing and designing. So we believe that this is an industry that is going to grow, and we want to make our effort to be part of that growth.
Okay. Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Most of my questions are answered. Just one thing.
Sorry to interrupt, sir, but your voice is very low. Could you please speak a little
can
louder?
you hear me now? Yeah. Is it better now?
Yes, sir. You can go ahead.
So most of my questions are answered. Just one thing. In the other income, how much was the incentive or a government grant this quarter?
This quarter, the capital subsidy grant of 2 crore 61 lakhs.
2 crore 61 lakhs. Okay, so what was the reason for such a sharp jump in other income from, I think it was just 12 crore in June quarter and 37 crore this quarter?
There was a sale of land and building in one of the surplus land and building, an industrial unit was there. So the sale of that has come, that is of 21 crore 22 lakhs.
21 crore.
Yeah.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Naitik from NV Alpha Fund. Please go ahead.
Hi, sir. Thanks for giving me a follow-up opportunity. So my question is on the retail stores. So I just wanted to understand what's our plan or what's our vision to add stores in the next 2-3 years. Do we plan to add similar 30-35 stores each year for the next 2-3 years? And where do we see number of stores say 2 years out? What are we thinking? Any target that we have in mind in terms of number of stores, etc.?
Thank you, Naitik. So, in terms of retail, for the company, it is an important business. It is a new business, but a very important business that was identified last year. And when we entered the business, we started with these two business models, which is Recode and Devo, in both which are very different from each other and different from the existing business that we have, because it is a different channel altogether. When we looked at what we want to do with this and the overall strategy, of course, we did not put numbers to it, but we wanted to make this meaningful for the company. So both these businesses will work better at scale, particularly the fast fashion business, which needs a lot of scale to operate given that it has low gross margin. We, however, understand and value the importance of prudent investing, and therefore wanted to get the business model and the economics right first, and therefore we are going at a slightly conservative pace, but we are very serious about this business. And we don't have any store numbers per se, but it is a very long-term business objective for the company to increase the percentage of retail business for the overall business, for the overall turnover. So I cannot give you a hard number as to what we expect for the coming years or where we see ourselves after 2 years, but we expect that this business will contribute to a much larger share of the revenue in maybe 2-3 years down the line. This is a broad qualitative number that I can talk about.
Got it, sir. Got it. And so my next question is, I wanted to understand, in terms of revenue, would a Z-Code store versus a Devo store would roughly be making similarish revenue per store, or there would be significant difference in, I don't want the number, but just wanted to understand the difference between revenues that a Devo store would be making versus a Z-Code store.
So I don't think it's fair to compare at the moment, because one is the difference in size of the stores and the other is the difference in price points, because Z-Code is all under 1,000 rupees of MRP and Devo is a mid-premium segment which is a completely different category and catering to a completely different audience. Also, for Devo, this is the first wedding season that we are going to see, so it is all very premature at the moment to talk about this. So I would not look at comparing one with the other. I would look at both individually, because each have their own various economic models where gross margins are different, inventory terms will be different. So rather than comparing them individually, it's better to look at each one and then assess like that.
Got it. And sir, in terms of Devo, I wanted to understand how would our pricing be versus competitors? Will we be at par with, say, the likes of Manyavar, or how would our pricing be?
You said pricing, sorry?
Yeah, pricing, as in average pricing of the goods.
So for Devo, we have positioned ourselves as a mid-premium segment brand for menswear. So for example, kurta pajama, which is one important category in the business, we have a starting price of approximately 1,700 to 2,000 rupees, and it goes all the way up to 10,000-12,000 rupees. And this is the initial phase. We have only about 12 stores now, and the main wedding season is yet to come. We are going through it at the moment. So we will eventually move across and see how the consumer demand is. So far, the demand has been very positive and we have got very good feedback. So, we are still exploring and understanding our consumer feedback, and that is why we want to get the model right first.
Got it, sir. That's it from myself. Thank you. Hello.
Thank you. The next question is from the line of Nilesh Shah from Arrow Investments. Please go ahead.
Yeah, congratulations on a fabulous set of numbers, and thank you for the lovely opportunity. So I think some of the questions have got answered, but I just wanted to understand that we are competing. I mean, in the long run, we would be looking at something like what Tata is doing with Zudio. Is that the intention of why we are actually entering into these kind of retail stores?
So when you look at retail as a business, it is a business of scale, and leverage will kick in only when the fixed operating cost at HO level will kick in only after a certain number of stores and a certain scale that you reach, and it has to be done in a very efficient manner. So of course there needs to be scale in the business, but before we get some scale and before we look at that, we need to get the operating efficiencies in place, and that is what we are working at the moment. So as we move ahead and as we get more confidence on the economics, definitely we will ramp up the store expansion, and that is something that can happen at a later stage. At the moment, we are looking at very lean teams and lean cost structure so that we experiment and we get the model right and get the store economics right. So we are opening new stores. Stores are very new, as well as the brand is also very new. So as the consumers become more aware of the brand, we are seeing an increase in footfall, repeat customers, and so on and so forth. So we are going through that journey, and it will take some time before we are able to give numbers and get to that level where we can start expanding rapidly.
Okay. No, so the point was actually what is the kind of capex that has been outlined for opening retail stores? But I think the clarity is not there in terms of how many stores you want to open. We know up till March you want to open another 15 stores, but coming year or the next year, there is no clarity in number of stores that you're looking to open. What are going to be the store metrics in terms of store closures, store sales? So in the sense, there are certain stores that may not do well. You may have to exit. So what kind of lease agreements you have? Are these company-owned stores? Are they franchisee-owned stores? You can throw some color on that. It would be very helpful.
Yes, we have indicated earlier some of these things. So, for example, we give forecast for opening new stores on a yearly basis. So we indicated about 35 stores for this year, and the capex that we identified was anywhere between 1 to 1.5 crores per store, which included capex furniture fixtures as well as the security deposits. So this was the kind of capital outlay that we had outlined, and we remain within that as a per store basis. The stores that we will open in the initial phase will all be company owned, and these will be all on lease. So there's anywhere between 9 to 12 years kind of a lease, which is a standard practice in the industry. That is the kind of lease that we are in. Of course, there are going to be stores that will not work. Some will work better than others. Some are more strategically located with higher rental, but more prominent locations. So there are going to be all kinds of things, but we are very early in our journey to assess those things. And that is something that we'll have to keep a watch on and take action accordingly.
Yeah, perfect. I wish you all the very best, and thank you so much.
Thank you so much.
Thank you. The next question is from the participant Resham Mehta from Green Edge Wealth. Please go ahead.
Yeah. Thank you. So the first question is, on the ethnic business. So men's ethnic wear, how big is it? What is the share of organized market? And why would you say that, you have a right to win here? So in terms of sourcing, the fabric that we use in our legacy business, I would reckon would be different from, the ones that goes into men's ethnic wear. So are there, the back-end ecosystem in terms of vendor sourcing, etc.? Is there commonality between that? Because I'm sure, the design sensibilities, will also be different for our legacy business, which is more mass, catering more to mass segment, while here in Devo, the positioning is more mid-premium. That's my first question.
Yes, absolutely. So ethnic wear as an industry has grown over the last few years, and even in the fabric business, we sell ethnic as a fabric within the Siyaram brand. So we do have access to vendors and suppliers where we get to the yarn level, and we have, contracts with them for weaving and processing and other things. So in the fabric business also, we outsource the ethnic wear fabric and we sell it through a distribution network. So we do have access and networks that we believe is a strong right to win for the company. Other than that, we have a strong brand name which we use. Devo is the brand for the ethnic wear, but we use the Siyaram initiative as a tagline outside the storefronts to build that trust with the consumer and use the lineage and trust of the brand to attract people in and give them the confidence of the lineage of the brand Devo.
So in a legacy business, how much could we be doing from ethnic fabrics?
It's a very small component because the major business is the shirting, suiting, which is traditionally been over the last so many years which we have sold. This is a newer business and a very small percentage of the overall fabric business, but it is something that is growing and something that is that we are participating in.
And how big is men's ethnic wear and the share of organized?
I think it's a very large market size in terms of menswear, but the organized percentage is very small. I don't have the exact number with me. I can get back to you on that. We have a total Indian market size which is like 2.5 lakh crores, which is men's and women's included. Of course, women's is the largest part of that. So men's is a very small percentage, maybe 15%, 10%, something like this. And out of that, the organized segment is a smaller segment. So it is a growing business. It is a business that in the last 15 odd years has become quite popular and is getting organized as we move ahead.
And in our legacy business, it's majorly through wholesalers, if my understanding is right. So there it's basically on an outright basis, or how does it work?
Yeah, so the distribution brands in fabric and apparel are with different brands have different networks. So some we go through a wholesale network and some we directly sell to retailers. So there are different brands and cater different markets. And all of these are on the outright basis. So we have a selling system and we have a debtor days that we collect money in. And then we are constantly in touch with retailers, and we keep having these exhibitions and conferences where we interact with them and strategize on how to move ahead.
And so with that, then how do we control the end pricing? Let's say, in a scenario, maybe over the last 2-3 years, where the demand has been very, very subdued. So, there may have been inventory piled up with, your channel partners, wholesalers, MBOs, etc. And then they may have resorted to, very heavy discounting, right, perhaps to liquidate the inventory. So then, how do we, since we say that, we have this brand resonance, we have strong brands like Siyaram, etc. How do we try and, protect the brand equity by ensuring that our channel partners do not resort to heavy discounting?
So in the fabric business is not an MRP driven business. Every retailer has the freedom to have his own MRP. But there are certain margin structures that we have in place through the distribution channel which controls his purchase price. And then, of course, for rotations, he has to, and we have people monitoring and visiting secondary retail outlets on a regular basis to understand what's happening at retail and influence the retailer in that sense. So the retailer has his flexibility, and there is not so much discounting in the fabric business. In the apparel business, which is an MRP run business, we are in the mid segment, so we don't have such high discounting, and it is largely an MRP run business with discounts which we interact with retailers and closely monitor and control. So it's not that those things are happening without our knowledge.
And what would be a retail outlet reach overall for both fabric and garments put together? I mean the legacy business.
So we go through a distribution channel, and the retail count would be approximately 50 to 70,000 retailers at minimum. There would be a larger number, but since we have the fabric business goes through a distribution channel where the distributor then buys and then sells ahead, so it is difficult to get an exact count.
And are we present across India with our legacy business, or are there some regions where we are much stronger and our revenue contribution would be much higher?
No, it is a pan-India business, and there are revenues distributed everywhere across the country.
Right. And just a last clarification on the EBITDA margin guidance. So you said that 14% EBITDA margin on the legacy business, which will take a knock of 150 bits because of the new age businesses. So when you say this is the EBITDA margin, you all include other income in your EBITDA margin, right?
Yeah, that is correct.
Understood. Thank you.
Thank you.
Thank you. The next question is from the line of Raj Patel from MSG Finance. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my questions were regarding the Z Code and the Devo. So are we planning to introduce any new product category within this segment?
So for Devo, we already have a complete men's wardrobe in terms of the kurta pajama, jodhpuris, sherwanis, and other accessories which include footwear and malas and other things, sapas, other things that a groom needs, and a complete collection in the store. For Z Code, we started with the fashion categories for men, women, and children, and we introduced footwear very recently, and we've got good response for that as well. And going forward, we'll continue to increase some categories, but it is going to be targeted for a lifestyle of a youth and Gen Z consumer.
Got it. And as we can see that the Z Code and the Devo are both operated under the COCO model, company owned, company operated. So are there any plans to explore any new model type of faster growth, such as franchisee or hybrid model type?
Yes, so these franchise models exist in both these kind of business segments, and that is something that is an option available for us. But at the moment, we are trying to get the operational metrics right, and we want to get that right first before exploring franchisee opportunities. I think that as a brand and as a company, we have an extensive network throughout the country because of our reach with distribution, and that is something that will always remain an option, but we want to explore it once we have better and more clear economics.
Okay, got it. And my last question was regarding the revenue. So the total, as we can see that the total revenue, the fabric contributes around 77%. So how do we plan to diversify our revenue mix towards the other product category that could be garment or retail in the coming years?
So with Z Code and Devo, as they grow, then the percentage towards apparel will start shifting. We don't have a number that we can talk about at the moment, but that is something that as a trend, as these stores increase and as the revenue grows, then definitely that as a percentage will start increasing.
Okay, got it. That was all from my side. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Ms. Ayushi Gupta for closing remarks.
Thank you. I would like to thank the management for taking the time out for this conference call today, and also thank all the participants. If you have any queries, please feel free to contact us. We are MUFG In-Time India Private Limited, Investor Relation Advisors to Siyaram Silk Mills Limited. Thank you so much.
Thank you. On behalf of Siyaram Silk Mills Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.